Opendoor stock closed out Thursday's session on a strong note, finishing the day up by 6.2% or 25 cents higher at $4.27 per share. For investors, it was encouraging to see the stock claw back some of Wednesday's sharp losses. The rebound didn't appear to be driven by a major news headline at first glance, but as the day unfolded, one very important piece of news emerged that could have long-lasting implications. That news is that the president of Opendoor, who is also serving as interim CEO, purchased 30,000 shares of the company on the open market. This is a meaningful insider buy, and it speaks volumes about where leadership sees value in the stock today. For months, hedge fund manager Eric Jackson has been urging the board and executives at Opendoor to show more conviction in the company by purchasing stock with their own money, not just relying on the grants and compensation packages they receive. Now, we're finally seeing that happen. It's a strong signal of confidence, and it directly aligns with what some of the company's most vocal supporters have been calling for. Why does this matter so much? Because insider buying has always been one of the clearest ways to measure leadership conviction. Executives can say all the right things in interviews or in shareholder letters, but when they put real money into the stock, it's a tangible demonstration that they believe the price is undervalued and that the company's future is brighter than what the market currently reflects. 30,000 shares might not sound like a massive purchase in dollar terms, but it's the symbolic meaning that matters most. It tells the market that insiders are willing to share in the same risks and potential rewards as everyday investors. Pairing this insider buy with Thursday's 6% rally gives the move even more weight. Even though there wasn't a traditional catalyst like an earnings report or a strategic partnership announcement, the combination of strong trading momentum and insider conviction creates a new layer of bullish sentiment around the stock. It changes the psychology. Instead of Opendoor simply being seen as a volatile meme-style trade, it adds a narrative of leadership belief and boardroom alignment. Now, let's put this into the broader context. Eric Jackson, in his recent hour-long interview with Dr. Phil Pullman on Stock Market TV, laid out his vision for Opendoor. He compared the company's potential to some of the great growth stories in technology and argued that the stock could one day trade at $82 per share. That would be an extraordinary move from today's levels. For Jackson, the key drivers of that upside are scale, technology, and leadership. The insider purchase we just saw fits directly into that framework. It shows that leadership isn't just along for the ride, but is putting skin in the game. The leadership angle is also important because of the ongoing speculation about Keith Rabois. Jackson floated the idea that Rabois could return to the board, though probably not as CEO. Rabois is a well-known operator with a track record of bold strategic moves. Even the possibility of his return has stirred excitement in the investor community. Combined with insider buying, it creates a narrative that the company is tightening up its leadership and potentially setting the stage for more aggressive moves in the future. Meanwhile, Opendoor's biggest rival, Offerpad, continues to generate chatter of its own. Offerpad stock has been moving on speculation around its asset-light approach. Offerpad is trying to pivot toward a platform model that minimizes its own exposure to inventory risk. In theory, that sounds attractive, but it also comes with challenges, chiefly scale. Opendoor's advantage remains its sheer size, dataset, and brand recognition. It's already in dozens of markets, it's refined its pricing algorithms through years of transactions, and it has the kind of infrastructure that rivals simply can't match. Investors have started comparing the Opendoor versus Offerpad race to the early battle between Google and Yahoo. Both were in the search engine business, but Google's scale, technology, and execution ultimately left Yahoo in the dust. The fear for Opendoor bulls is whether Opendoor could somehow end up being the Yahoo, but when you factor in its advantages, it seems far more likely that Opendoor is positioned to be the Google in this equation. Offerpad's asset-light model may help it survive, but it doesn't have the breadth or the brand to dominate. Another layer to all of this is the retail investor dynamic. Opendoor has become one of those stocks that traders gravitate toward because of its volatility and story. Short interest remains elevated, and any sign of insider buying, leadership change, or bullish speculation can quickly create short-covering rallies. Thursday's 6% move might have been fueled in part by that dynamic. Once word spread about the insider buy, momentum traders jumped on, and shorts who were leaning on the stock had to scramble. This kind of dynamic is likely to remain part of Opendoor's DNA for some time. Periods of sharp rallies followed by equally sharp pullbacks, driven not just by fundamentals but by sentiment. For long-term investors, though, the fundamentals are what matter most. Profitability remains the biggest milestone. The company is pushing toward break-even on an adjusted EBITDA basis, and management has guided towards steady improvements in margins. That's what Wall Street wants to see, not just growth, but growth with discipline. Insider buying reinforces the idea that management believes those goals are achievable. Looking ahead, the November earnings report is going to be the next major checkpoint. Investors will want to hear updates on progress toward asset-light initiatives, the pace of transactions, margin expansion, and any hints of leadership changes. The interim CEO's insider buy will almost certainly be brought up on the call, and it will be interesting to hear how the company frames it, whether as a personal show of confidence or part of a broader commitment to align with shareholders. At the macro level, interest rates remain a big swing factor. Whenever the market begins to believe the Federal Reserve will cut rates sooner rather than later, housing stocks get a lift. Lower mortgage rates would revive housing activity and directly benefit Opendoor's model. Higher for longer rates, on the other hand, would keep a lid on housing volumes. But even in that tougher environment, Opendoor has shown it can adapt. The real prize here is long-term transformation. Real estate is one of the last massive industries to be disrupted by technology. The buying and selling of homes remains complicated, stressful, and expensive for consumers. If Opendoor can truly become the default platform that simplifies the process, offers certainty, and makes transactions faster, then the upside potential is enormous. That's the vision Eric Jackson is betting on, and that's why he has floated that extraordinary $82 target. The path won't be smooth. There will be skeptics pointing to housing cycles, inventory risks, and competition from traditional brokers. But insider buying sends a signal. Leadership believes the company can overcome those challenges. Combined with scale, data, and brand, it suggests that Opendoor has the tools to execute on its mission. So, in summary, Thursday's rally was about more than just price action. It was about a shift in the narrative. The insider buy adds credibility to the bull case. The leadership speculation adds intrigue. The comparison with Offerpad highlights the strategic choices ahead. And the long-term vision reminds us why people are excited about this stock in the first place. At $4.27, the market still doesn't seem to believe. But for those willing to hold, the story is still in its early chapters. Insider conviction is now on display, and that could be the spark that brings more investors off the sidelines. For bulls, the destination remains the same. Whether it's $82 down the road or a more modest multiple of today's price, the opportunity is built on the belief that Opendoor can redefine how real estate works. Thursday's developments bring that vision one step closer to reality.